Hey there, everybody. Good morning, good afternoon, good evening, depending on where you guys are at. I hope y'all are having a good start to your week so far. Happy Wednesday. As always, we'll go over SPX, but then it's really up to you guys. Whatever questions you have around the market, around indicators, anything at all. If it's a trade you're in, you want my 2 cents on, I'm happy to walk through it. This is a great place to go through it in a little bit more detail and depth. Um, and I'm happy to answer your questions. Hey, Laura, Earl, EJ, good to see y'all. I hope you guys are having a good trading day so far. So let's go ahead. We'll start with SPX and then we will go on from there. So, starting with what we see currently on the intraday charts, we attempted to move higher this morning. As you can see on the 1 hour chart, our Bollinger Bands have started to become very tight together as we build into a squeeze down at the bottom, and we're allowing momentum on the hourly chart to reset. So, when the Bollinger Bands really start to get narrow like this, it's a good clue. Non says my audio is warbly. Is it bad for anyone else? Let me know and I'll reset that now before we keep going. It's good? Okay. Just let me know if it does get back bad. I do have a backup mic on. Um, but starting off here, so when the Bollinger Bands get really tight like this, it's not uncommon to see a squeeze form. And oftentimes, when that squeeze does start firing, you get a bigger than anticipated move on what you're seeing. So, the question, of course, that we have here is, does the squeeze end up taking us to the upside to where we're able to break 4,300? Go up and test the August highs of last year at 43.25 and potentially continue this bullish trend to the upside? Or does this end up being a counter trend squeeze where 4,300 holds as price resistance and we drop back down and kind of get a reversal? Certainly, the hourly chart is still bullish at this point, right? Which would want to have me lean towards the upside. But you can see this morning where the price, you can certainly see it on the intraday charts, where we got very close to 4,300, just shy of tagging that level, and then immediately pulled back down off of it. We actually made a bearish divergent bar on the hourly chart. So for anyone who did take a counter trend trade and looked to short there, that was a good clue. Hopefully, you locked in a quick profit whenever we came down towards this 42.70 price level and held. One of the clues that you would have wanted to lock that in a bit more quickly was the fact that the Bollinger Bands did not try and flare open to the downside, right? When the price put pressure down at the lows of the day, the Bollinger Bands remained flat. So that was a good clue to go ahead and lock in your profits. And so right now we're just kind of stuck in this choppy sideways range between 4,300 and really 42.70 in a 30-point range right now. So I probably won't take this trade myself today, just in case the price does start to move prior to market close. But if you're not anticipating the squeeze to fire today, if you think all today is kind of a consolidating day for the markets and SPX to catch its breath, then you might consider doing something along the lines of an iron fly. Now let's go ahead and check out where max pain is for today. I'll pull that up here. So max pain for today, for those of you who can see, and let me make this bigger for you guys over on YouTube and Twitch so you have a bit better view of the screen here. So this is max pain. For those of you who don't know what that is, max pain is basically the level where people who hold both calls and puts have the most to lose, right? And as we know, market makers like to be equal opportunity dream killers. So it's where the most people would lose money on the option side of things. And right now that max pain's at 42.50, which, arguably isn't that far away from where we're trading at now. But if we do manage to stay in this range, I don't necessarily think it's in play for today. Sometimes when that level's a little bit closer to where we're trading at, you'll see the price go into that level into the close, and it makes for a potential good setup. But today, that's not, it could still be in play. Don't get me wrong. If we start to break and sell off to the downside, then 42.50 is a very nice psychological level to play into. But for what we're seeing right now on the charts, it's not really in place. So if we were to look at an iron fly for today, based off open interest, there's quite a bit of open interest around 42.80. For those of you who don't know, sometimes where you have those high amounts of open interest, that can sometimes be a magnet for the price to kind of go down into that range and stall there. So if we really think that 4,300 is going to hold, 42.70, if you want the full range, right, then you could go with 42.85 for the bin, do a 15-point spread. That's about a 930 credit, 560 risk, depending on your fill here, right? It's jumping around a bit. But the idea is we're not anticipating a break below 42.70. We don't anticipate one above 4,300, and that we're just going to chop in the middle of this range. Then this is a great way to have that theta decay really work in your favor throughout the day and to lock in a quick profit. If that's a little outside your risk tolerance, which I know it is for me, for doing a same day expiration, especially if it's a trade that I plan to let cash settle, you could either bring the strikes in and keep the 42.85 pin, which is around a 740 credit, 260 risk. So certainly not a bad risk versus reward. Or if you want to go with the 42.80 level, just because of the open interest there and bring that down some, you can see it's a similar risk versus reward. It just kind of depends on where you think the underlying price is going to hang out into the close today. And looking at the intraday charts right now, I would honestly say maybe currently somewhere between 42.85, 42.80 kind of makes sense because the hourly chart, the temporary simple's right by 42.80. So that's trying to hold as support. You can see with the close of the last bar, even though we dipped below that range, we bounced back up into the close and still held it. And you can see here currently on the intraday charts on the smaller time frames, 42.85 is acting as slight resistance. So if we do manage to still just kind of chop around here, that doesn't, in either of those strikes, right, doesn't seem like a bad level to consider iron fly. And yeah, Elise, absolutely. We can look at GE right after this. I'd be more than happy to pull that up. That's our $500 challenge trade that we're in right now. Just keep in mind if you do take this trade for iron flies, sometimes it is better to use one of your day trades if you have them available to you in a smaller account. If you don't have a pattern day trading limitation, then no harm, no foul there. But you might want to consider day trading out of this because as we get closer into market close, if we do start to pick up on movement or in a swing move in that last hour or two, you're going to be really mad that you didn't take the profits prior. The good thing about putting on an iron fly right now is we just got done with Europe's close, right? That happened at 10:30, and we're starting to now go into the lunch hour. And as you can see, Europe's close was a bit of a non-event. We had a little bit of a run up, arguably a few points, but overall, not too dramatic of a move after Europe closed. So because of that, there's a good probability that we could start to chop going through the lunch hour. And that chop is a great way for 0-day expirations like this to really take advantage of that theta decay and to have it work in your favor. So it might not be as big of a profit as the 730 max profit potential that you see, but if you want to scalp a quick win before market close, this could be a good way to go about it as long as, of course, you're comfortable with that capital risk. Because if we do start to move prior, if the squeeze starts to fire prior on the hourly chart, whether it's to the upside or to the downside, you'll want to, of course, always be comfortable with the capital risk that you have out there. So just a trade idea for you guys if you want to consider it. On the daily chart here, we had our daily squeeze that has started to fire to the upside as we can see. Still bullish sentiment on the compound breakout tool. Momentum is still bullish with room to move higher. So all of that looks good. On the top chart, we're in a bullish trend with our moving averages. We do have a gap down here at 42.32 to potentially fill to the downside. May not fill it, right? People who like to trade gaps usually look for that instant follow through. But what I have found in my years of trading and following along with gaps is that they don't always fill. In particular, the ones, like there's that saying out there like 90% of the time gaps fill. And that's true, right? But the two things that you need to be mindful of with that thought process is one, sometimes they can take years to fill, right? They don't always fill right away. So you need to be cautious about that. And two, there's still that 10% of the time where they don't fill. And I have noticed that the times that you don't particularly get a fill on a gap move, it's not uncommon to have it be from a gap up, like we see here. And the reason why is because the market overall is more of a bullish beast, right? We know that if we were to pull up a long term chart, overall everything continues higher. We certainly get our pullbacks down into big support levels, like on the monthly or the quarterly charts. But normally everything stays in a bullish trend. And so, because of that, it's these gaps that happen that have less probability of filling. So I do want to make that clear as I point this one out. The reason why I'm tracking this gap, however, is because we've had a great move on SPX. And currently, this gap fill, if it were to fill, would bring us right back down towards the 10 period simple. So it certainly wouldn't be out of the question to get a little bit of a reversal here back down into support, fill the gap. If support holds, that can make for a great re-entry to play back up into 4,300 or higher. The second thing I want to point out on this chart is though we do see the Bollinger Band still opening up and everything else about this is still pretty bullish, currently right now we are printing back to back divergent bars. So the other day on the 5th, we had a bearish divergent bar that followed through barely with a lower low. We bounced up, made a bullish divergent bar that followed through with a higher high this morning, but stalled at 4,300. And now going into the close, depending on how this prints, could be another bearish divergent bar. And if it does print the bearish divergent bar, right, that's three divergent bars in a row. And you can see that technically they've all followed through with their signal, but overall they are consolidating. And so it's that consolidation we just want to be mindful of, that we could continue to kind of chop in this range. Certainly that would fit the narrative of the hourly chart currently. And we could kind of stall here, build energy into that squeeze before we get going again. So just something to be mindful of. Let's go ahead and pull up GE because that is our challenge trade. Now, for those of you who took this trade last week, right? We jumped into this trade last week, took the quick win whenever we had the follow through on the bullish divergent bars. But if you held it through Friday, it allowed for some excellent profit. Now, unfortunately, I was actually off Friday. I was celebrating family birthdays. We took the kids to the zoo, which was pretty fun. Um, but I knew I wasn't going to be around, which was part of the reason why I closed out of this trade on Thursday. But we entered back here off this bullish divergent bar, had to sit through a little bit of pain the next day on a pullback. For those of you who aren't familiar with the divergent bar indicator, it basically helps give you a good probability of either a higher high if it's a bullish divergent bar or a lower low if it's a bearish divergent bar off the bar that prints the signal. And I usually give it 3 bars. That is what I have found to be the sweet spot for whether or not there's a good probability if it will follow through. It usually follows through, not if not immediately, right, with the next bar, then within 3 bars. And so you can see here we had this bullish divergent bar, didn't follow through the next day, but it did print another bullish divergent bar. And then the following day, we got the higher high on both of those setups. So it happened within the 3 bar rule. And that's where I took my profit because we got right up towards price resistance and I knew it wouldn't be around the next day. So I was happy to take the quick win. Instead, if you held on through Friday, especially if you had a runner on, well done, because that moved very nicely into the money for our spread. It allowed for a great risk versus reward scenario. And so you might have been able to lock it in then. I decided, because everything looked good when I checked this into the close, to look for a re-entry because I still liked the trade setup. We were starting to break price resistance. We had bullish signals on momentum on the compound breakout tool. And even now, the squeeze is still a valid setup. So all of that is looking good. Once again, similar situation to the first entry. We've had to sit through some pain on this. As you can see, we got a pullback, still held support. Momentum was still bullish on the pullback, so that's a good sign for bulls. And now we're starting to bounce up once again. As long as I think we can trade and hold above 105, I still like this trade. Now, it's not necessarily based off the bullish divergent bar for that higher probability, but we do still have a valid squeeze. we still have plenty of room on momentum to continue higher. And so if the squeeze can start to fire, the compound breakout tool still being valid, all of that still looks good to me to continue to the upside. You can see I have an alert there to let me know if we start to break above levels that I'm watching. On the to go to the 4-hour chart here, on the 4-hour chart, and yeah, Earl, absolutely. We can take a look at JPM too. I'll add that to my list here. So on the 4-hour chart, we had a recent true low. So that's a good sign that we could start to get into a bullish trend. We had a squeeze that has started to fire to the upside. We still have a valid bullish signal here. So even though it did technically cancel with one red block here, the signal is still bullish because the trend at the time it started to print is still a bullish trend. So until we get two boxes or all three boxes to print red in a row, or if we start to get a choppy signal like this, then that will cancel out the bullish signal. But for right now, that's still valid. We pulled back into 4-hour support of the 10 period simple that held. Bollinger Bands are starting to flare open. So all of this is looking good for us to the upside as long as we can close back up towards the highs of the day. Certainly, if we can maintain holding above 105, then I still like this trade idea. Because of where we entered the trade, though, and the strike I chose, we are still a little bit behind on the trade currently. I jumped in for a 75-cent cost basis for the June monthly expiration 110 call. And right now the mark is around 56 cents. So we're down just shy of 20 points. That's okay, right? As long as everything can maintain the bullish trend, if we can get this daily squeeze to start to fire to the upside, I think we'll be able to recoup that back around to at the very least break even, if not a profit. So this is more just a game of patience at this point. Ideally, I would prefer to take a profit on it this week and not have to hold it through the weekend. But we have time until next week on this trade. So it's more just a way to sit tight and be patient on it to see if it follows through and works out. But that's my 2 cents on that, Lee. So I still like everything on the chart. We'll just, take it one day at a time and see if we can't keep stair stepping up, kind of like what KB Holmes is doing. For those of you in that trade, that one has worked out quite nicely for us and continues to be a beast of a move this morning. Let's go ahead and pull up JP Morgan. And absolutely, we can take a look at Netflix as well. So on JP Morgan, this one actually doesn't look too bad either in the sense that it too has a daily squeeze, had recent true lows print during this consolidation. So that's pretty good. The last time we had true lows print back here, we had a nice run up into the current range that we're in now. So that was a nice, like 15-point move higher for JP Morgan. That's not bad. We have the squeeze, we have the bullish signal and the compound breakout tool. Momentum's been hugging the zero line, but it has started to cross back above it. So that is some bullish sign signals, and it certainly has room to continue to the upside. Uh, we're holding our simple moving averages as support. Technically, they're stacked up. The 10 period simple is above the 30 and both are above the 100. But this is pretty much consolidated, right? They're all kind of on top of each other. It's not like that clean picture like we have on GE, for example, of the nice trend. So do still want to be a little cautious of consolidation. It looks like we made a bullish divergent bar the other day at 139.31. That is technically followed through with the higher high, given just where the price is at this morning within the 3-bar rule. Bollinger Bands are opening up. So I don't think this looks bad. The only thing I'm not a fan of about this chart is you can see we're having trouble breaking above arguably 141 to 143-ish, right? You can see that that's been price resistance back here. We attempted a gap up, but the close of the bar dropped right back down to that 141 level. We stalled at that level here as well. And so it's kind of acting as a price resistance. And for those of you who have been trading with me for a while, y'all know that I'm very mindful of price support and price resistance because everything else, right? The squeeze, the compound breakout tool, everything else can be in line and look beautiful, but sometimes price resistance and price support win over everything else. And so for myself, normally when I see this kind of setup, I'd be looking at, a bullish trade entry, but I can't personally do it at price resistance. I would either need a pullback into support, and if that holds, then that would be my entry because that at least gives me room to play up into 141, if not higher. Or I need confirmation that we're breaking this level to try and continue to the upside, kind of like what we saw in GE. But it's hard for me to jump into a trade right at price resistance. A good example of that was actually on SPX this morning. It looked like things wanted to move higher, but we were right at 4,300 as price resistance. And so until it started to break above that, I'd prefer to jump into a bullish trade back down here, right? If it can maintain support, it gives us some bullish signals. This gives us a lot more room to play into 4,300 than rather buying at 4,300, hoping it breaks when we know how big of a level that is. And so that's kind of what I'm seeing here on JP Morgan. Let's pull up the weekly chart, make sure we're not running into like weekly resistance or something like that. Taking a second to load, guys. I do apologize for that. So on the weekly chart, I get why we're having this battle right now. It's because we're just starting to try and break above the 100 period simple. And you can see that really this has been a price level that we've struggled with all year, not just recently. Arguably, the top end of that range, like I mentioned earlier, is 143. So for those of you who don't know, whenever you've trended below the 100 period simple in a bearish trend like this, right, where the 10 is below the 30 and both are below the 100, and you try to go up and break the 100 period simple again, you need to be very cautious because sometimes it can be a trap for the bulls. And it gets that reversal back to the downside. So this makes me very cautious about potentially even playing that daily chart higher because if all we're doing is barely breaking, but we can't manage a strong trend move to the upside, it's not usually the best sign. The good news for bulls is we're not immediately selling off and giving it back, right? It's just kind of chopping in this range. Momentum's resetting. We have consolidation here. We have a squeeze. Earnings is later in July. So we still have some time before that. But it could be a case of where we just kind of consolidate going into that announcement. Now, it's a little early for that, um, to usually see that consolidation going into the news, but that's what everything else about this chart is telling us. So it's a similar situation unless we can really start to break higher. And if we do, then playing it up into 150 or the ATR trailing stop at 152 seems like good targets to the upside. But if we can't break this level, be very mindful about a reversal maybe down into 134. And certainly if it starts to break 130, it looks like that's probably a clue that we're rolling back down at the very least down into this 126, 125 level, if not maybe for a complete rollover into a new bearish trend. So not my cup of tea. Sorry, Earl. I don't see any trade ideas that I necessarily like on that one to give you my 2 cents on, but happy to do the analysis, absolutely. And Anne, I see you mentioned DE. I'll put that on my list, but up next, let's go over Netflix. Soon as it loads up, guys. There we go. So Netflix has had a beautiful run to the upside. Before I zoom in, though, the one thing I do want to point out is you need to be very cautious about exhaustion. We did start to print a red bar yesterday. Today's a green bar. If we can keep going with green bars, then what will happen is we'll start to adjust the axis higher. And if that occurs, then that means that this trend can really keep going until we get a few red bars in a row. Otherwise, though, if we get like another red bar tomorrow or a couple red bars in a row, kind of like what we've seen back here, then we're right by the top of the axis, right by exhaustion levels. And it could be a clue that if you've been in this for the bullish run, you might consider taking your profits and locking them in, especially if you have some runners on the table. And the reason why is because whenever we hit exhaustion, there's a good chance that the price will either chop and start to consolidate to allow momentum to reset. Or in this case, because it's on the bullish side, there's also a possibility that the price will pull back, which once again will allow that momentum to reset back towards the zero line. I remember I'm still kicking myself because we were actually looking at a trade idea on Netflix back here off of this bullish divergent bar, and I chose Apple over Netflix, which Apple was still a winner. So I'm not too mad about it. But this, especially for an overnight move, if you did same week expiration, it was just a beautiful follow through on a higher high. I know Henry here at Simpler was in a trade on Netflix for that. So that was very well done. It made a third deviation Bollinger Band snap. So when that happens, there's a good probability the price will either stay within this trading range or continue higher. You can see the bars stayed within that range until the Bollinger Bands caught up with the price. Then we got to pull back into the 10. Here was another bullish divergent bar. So that was another good re-entry if you're following along with that. That followed through with the higher high here. And then we've continued to kind of stair step up. We did manage to break above 400 as a price level. So now that is acting as price support for that psychological level. Technically, this bullish signal is still valid. The squeeze started to fire to the upside. So all of this looks good, except for the exhaustion. And of course, we did make a bearish divergent bar the other day. Now, keep in mind a bearish divergent bar and a bullish trend is a counter trend signal. So it's less likely to follow through, or if it does follow through, it could be a case of this where it barely follows through compared to the bullish divergent bars, right? And the bullish trends, those have a much better probability. That's why usually on bullish trends, I look for bullish divergent bars. And in bearish trends, I look for bearish divergent bars for trade entries. But we did make one here, followed through barely with a lower low. And then today, depending on how we go into the close, this also has the possibility of a bearish divergent bar. And so when I pair that up with exhaustion, it doesn't necessarily mean personally I'm going to take a counter trend signal, right? Because that for me is a little risky given the bullish nature of everything else on this chart. And because we know when momentum resets, it doesn't need the pullback. All it really needs is consolidation to reset. But it is a clue to me that if I see momentum at exhaustion levels and I'm getting a bearish divergent bar, that if I'm in a trade, I might want to consider locking in that profit, right? If I haven't done so, or if I have a runner on, I might want to finish taking that off the table. Worst case scenario is we pull back, right? Or it continues to hold 400, and you can always look for a re-entry to jump back into the trade. Um, but I'm not necessarily a fan of seeing this pull back today. So there's not really a trade idea I'd want to put on this right now. Like I said, I'm not really looking for a counter trend signal. 400 is a really big psychological level. We're only $4 away from that. So I don't necessarily want to try and short here and play it more aggressively to the downside, but I don't really see anything here telling me to try and jump in and play this bullish, right? I missed the entry back here. I missed the re-entry here, and I'm okay with that. There's always going to be a new entry on something else. So I don't need to have a case of FOMO about this, feeling like I missed out because I know there's always going to be another setup. So I'm not too concerned about that necessarily, but I don't really see a trade that I'd want to take. Let's take a look at the weekly chart really quick. So on the weekly chart here, the weekly squeeze is just starting to fire. So that might help it kind of keep going and adjust the axis higher on the daily if the strength can continue. We do have the bullish signal, which is still valid on the compound breakout tool. Momentum's building up. There's room to move higher. But similar situation to what we actually just talked about with JP Morgan on the weekly, which is this was in a bearish trend and it is just now attempting to break the 100 period simple. Now, I would argue it's already doing a bit better of a job than JP Morgan is trying to break the 100, but it's still just barely breaking above it. So we want to be mindful of the possibility that one, it could stall here, and two, if it pulls back, the real clue is, can it hold the 100 period simple now as support? If it pulls back, holds the 100 as support and starts to bounce, then that's a really good spot for a re-entry to play higher. If it starts to break the 100, then you'll be very happy you protected your profits and didn't jump back into the long side. It's still midway through the week, right? It's a Wednesday, so we still have 2 more trading days and the rest of the day to get through. But if this weekly bar closes in a bearish divergent bar, that would be another sign of caution for me about the possibility of it either stalling here or it pulling back down into the 100, which if it does, gives you a much better place for an entry to then try and play a bounce if that's what you're looking for, especially if all of this can remain valid down here. So it certainly has had some great strength. I don't think it looks necessarily like a bad chart, but for a new trade idea, it's kind of a keep it on your watch list and sit and wait, right? Evaluate it, wait for the better entry, wait for momentum to reset. And if you kind of get those things a bit more in line with each other, then it might give you access to jump into something and try and replay it back to the upside. Or if it really starts to pull back, maybe gives you a pullback reversal entry to play back down into daily support. And then let's pull up DE here. There we go. So on DE, this one's in a bearish trend on the daily, right? The 10 is below the 30, both are below the 100. We did start to find some level of support here. Weren't quite at exhaustion, but we were at prior levels where we hit exhaustion, right? So we weren't at the bottom of the axis, but when we zoom in here, you can see every time that we've tagged this particular level and momentum that we've had some sort of pullback in momentum, which is usually in this case caused a reversal back into resistance before the next leg lower. So that's currently what we're seeing here. Yesterday made a bullish divergent bar that also had a great follow through with a higher high. So well done for anyone who took that. That is also allowing the momentum to reset. We have a consolidating signal here on the compound breakout tool. We are starting to build back into a low compression squeeze. The caution I have here for somebody who is maybe in a reversal trade right now is notice the Bollinger Bands. The Bollinger Bands, even though the price is starting to put pressure on the upper Bollinger Band, currently they're flat. If I was inclined to think that this was moving all the way up into the 100 period simple, usually they would start to open up, right? Because they're anticipating that move higher. And that gives you a better idea that you can play up higher into this level. But the fact that they're flat means, at least as of right now, they're not anticipating a break of this range. And so if you did take something like this bullish divergent bar trade, which to me would have been a little aggressive, but well done if you did, um, you might want to consider locking in those profits. If you're looking for an entry to try and short this back to the downside, then watch, I would say, to see how this plays either into the close or watch it into tomorrow. If we start to pull back into the close today and drop back down into a bearish divergent bar, that might give you your entry. Or two, if we close like this and tomorrow it holds this level and starts to pull back, that might be confirmation of a rollover entry. But right now, you still have more consolidating signals down here. And if we do manage to stair step up tomorrow, forcing those Bollinger Bands open, the next target to the upside would be the 100 period simple at 395. And certainly, if we tag that and stall like we did here, especially if it makes a bearish divergent bar like it did there, much better place to short from than where we're at currently. So it's another case of keep it on your watch list, but there's not necessarily a trade idea I'd put on at this exact moment in time. Let's pull up the weekly chart real quick. So on the weekly, we attempted to break below the 100, and now we're actually trying to bounce back up. The weekly chart had a bullish divergent bar that followed through with the higher high. We do have some true lows, but I'm not necessarily a fan of the Bollinger Band. So if they can remain flat this week into next week, that's a better clue that we might start to bounce back up towards 400, if not higher. But if we stall here and roll back down, that's a clue that the 100 and the 10 are acting as resistance. There is still a bit of room on momentum here, and we could roll back down at the very least, back down to this 350 level, if not for a stronger play lower. Currently, though, the top chart is just consolidation. You're getting a pullback signal today. So if that can remain valid into tomorrow, that once again helps with a bounce up. But if it immediately cancels out like it did here, then we're still in the consolidating signal that we've been in, and we're still likely to build energy into that squeeze. So, once again, not really anything I see to take for a trade idea just yet. There's nothing that I would want to do personally, but that is what I am getting from the DE chart. Let's go on to PANW now. Of course, and not a problem. So for PANW here, there we go. Overall bullish. We are getting close to the top of the axis. Maybe have a couple more days until we hit it. But do need to be careful that we could be starting to get to exhaustion levels. Great bullish signal here. I mean, it's had a beautiful run to the upside. Currently, it's pulling back down towards support. So if the 10 period simple can continue to hold us support, 230 wouldn't be a bad place to try and go back up and retest the recent highs, if not continue the trend to the upside. But like I said, just be mindful because momentum's starting to get pretty high on the axis. If we pull up the weekly chart, weekly chart is also close to the top of the axis. Notice how it's building up, but we're right by where we've seen prior exhaustion levels hit. Do still have a bullish signal on the compound breakout tool. The trend is technically bullish. Bollinger Bands do look like they're trying to open up a little bit, but I'm not a fan of the bearish divergent bar up here. And we're nowhere near support levels to try and take advantage of jumping in and playing off of support for a move higher. This is not the ideal place to try and get long something if we're at exhaustion levels and we start to stall, right? That's a possibility that we could either go into chop or we could start to actually get the pullback into support like we're looking for, which would then allow for a much better entry. It would allow for things like momentum to reset and give us that opportunity to then try and play it back to the upside. So, once again, it's had a great run, but don't know if this is the place I'd necessarily try and jump into anything to play higher. So hope that helps you out. And then, yeah, Chris in Chicago, thoughts on BA long? You can pull that one up too. Oh, thanks, Dakuto. Appreciate it. Glad the mic's on point today. That's what I love to hear. No mic issues means it's a good day. And Nihon, of course, absolutely. There we go. So for Boeing, we're pretty much in consolidation, and this is actually a very familiar picture. Boeing is, at least the past couple years, has been no stranger to just hugging its 100 period simple, whether it's on the daily chart or on the weekly chart. Let me see if I can go to the weekly chart first, actually, and just show you the example of this, because I'm pretty sure it was on the weekly chart that I'm thinking of. But Boeing has a bad habit recently of just kind of hugging the 100 period simple where it doesn't quite get a move to the upside off of it and it struggles to get a move to the downside. And this is what I'm thinking of back here. So you can see back here on the weekly chart a couple years ago, the 100 period simple was pointed lower. So it did trend down with it ultimately, but it never actually got going in a proper trend move, right? Like it did last year with the bearish trend, or like we've certainly seen in the past with the bullish trend. It just kind of hugged the 100 period simple for quite some time. Because we're on the weekly chart, let's start here. So on this time frame, momentum's resetting and it's very close to the zero line. So it's had a proper reset basically at this point. We have the consolidating signal on the compound breakout tool. We have a really nice squeeze building in. Did have a recent true low a little while ago, back in March. So could start to see the squeeze fire to the upside. We made a bullish divergent bar 2 weeks ago that followed through with a higher high. Depending on how we go into the close this week, we might have an opportunity for another bullish divergent bar. The simple moving averages are technically in a bullish trend, but Bollinger Bands are flat, right? And we've talked about this before. When they're flat, it means, at least as of right now, they're not anticipating a move higher. And so that would make me a little bit cautious that we could stay in consolidation. The other clue that we could stay in consolidation is, of course, we're right by price resistance. The entire year, actually, we have struggled to see any sort of break above 220. Now, that doesn't mean you can't play into 220 because we're trading at 210 right now. So that's a 10-point move higher. But that would be the first target to the upside. And if you see any sort of stalling at or slightly below 220, I would personally, if you're in a trade, take the quick win and protect your capital. If it breaks above 220, you can always jump back into the trade, right? You can always jump back in. But what you don't want to have happen is it gets to 220, you have that profit, you try and be greedy about it, and then that profit disappears because you've dropped right back down into support and have remained in this consolidated range. So let's pull up the daily chart now. And yeah, the dude, absolutely. We can take a look at cost. My pen's dying. And plug, absolutely. We can take a look at that one too. Let me switch my pens. There we go. Cost and plug. So on the daily chart, you can see where this price resistance has been. And you can see also that for a good chunk of this time, it's been holding the ATR trailing stop as a technical resistance. And so the other day we made a bullish divergent bar. There's still a possibility we could follow through with the higher high, right? We still have 3 bars to let that work out, including today that we're in. And that high is at 211.68. But notice the high of that bar is still below the ATR trailing stop. So that would make me a little cautious. Momentum's technically bullish. This is a consolidating signal because our moving averages are consolidating. So as soon as this canceled out, it went back into a choppy signal. We still have a great squeeze building up, but we've been in this squeeze since about late April due to all the chop that we've experienced. So this is another situation, like I mentioned, where right now, it just kind of seems to be hanging out around the 100 period simple, not really getting the break to the upside like we want, not really breaking down. You do have the Bollinger Band starting to open higher. So that could be a clue that, one, we could go up and test the ATR as resistance, which is currently at 215 ish, I want to say. Let me see. 213, excuse me, 213.55. or if we do break the ATR trailing stop, could get us back to the top of that range of 220. But hard to necessarily move higher. And JC, yeah, so my Bollinger Band settings are, let me just bring up my studies here. So it's the second deviation Bollinger Band, which is a -2 +2 on a 20 length. And then I also have the third deviation Bollinger Band still set at 20 for the signal of whenever the price exceeds the third deviation Bollinger Band, because that can sometimes be a continuation move. So it's the second deviation, which is the inside blue line, and the third deviation, which is the outside blue line. And for those of you who aren't aware or maybe new, we do have some great resources here at Simpler Trading and the Education Center that goes over a bunch of different topics that we've talked about in the past. And I will find this Google Doc spreadsheet. There it is. And I will post this in the alert section for you guys. So that way, if you're not privy to it, you can get access to this document. Basically, and I'll load it up here now, pull it up so you guys can see it. And I'll also post this on Twitch and YouTube for you guys. If you have access to Simpler Trading, though, and keep in mind, we do have a free room at Simpler Trading. That's what I'm in currently right now. So it's free to anybody, right? All you have to do is just sign up with your email. Doesn't cost you anything. But you also then have access to our learning center in the free room. And in our learning center, we have a bunch of great videos that we've done a few years back, not just myself, but a lot of other traders too. All of the videos I did personally are going to be in column B, but you can see here we talked about strategies, we've talked about different indicators, but there's specifically a video called What's on My Charts and Why. And as long as you're signed into the Simpler Trading website, you can click on this link and it will direct you to exactly where that video lives, which is great, right? You don't have to go searching through the site to try and find it. You can go straight to where the video lives. And I know I'm logged in, but I guess it's wanting me to relog in. That's okay. But it would take you to the video basically, and you can watch it there. So the What's on My Charts and Why video goes over all the indicators and all the internal settings. So if you're ever curious about what my settings are for the ATR trailing stop or my simple moving averages, or why I like the indicator, right? Why I like the awesome oscillator, for example, I certainly talk about it in that video. So certainly check it out. But a lot of great educational material in there too. So if you don't have that document already bookmarked, certainly consider doing so. But yeah, Boeing just looks like Chop City. It's not it's not really something I would want to trade at this point. Arguably, if I were forced to put on a trade here, maybe something along the lines of a unbalanced butterfly, right? Something that can take advantage of the consolidation as well as the possibility of a bounce higher. So let's say we go out to next week. Let's see, the bottom of these simple moving averages is the 30 currently, and that is at 203.85. I don't think we'll get much premium for next week, but let's go ahead and price it out. Yeah, not the best risk versus reward. I'd certainly want a little bit more premium than this. But the idea is with an unbalanced butterfly where you have the extra contract on the credit spread is you take advantage of the chop. So as long as we consolidate, or if this does start to bounce higher and a trend move, then the credit that you opened this trade for, which is around 20 cents, is yours to keep, right? That's your locked in profit. The benefit about the unbalanced butterfly, though, is let's say it does pull back into support, which it literally just did the other day, right? So if we drop back down but maintain holding the 30 period simple, then that means we're either at or above our short strike, which allows for a better profit potential of 271. The risk on this trade is if we really start to break below 202.50. So if we drop down to, let's say, 200 by next week's expiration, then you have to be okay with the risk of 230. Now, like I said, personally, I would want like a 50-cent credit or better on this right, to allow for a bit better risk versus reward. But this is a good way to go about playing a choppy chart like this and still try and collect premium, as well as maybe waiting for a bigger trend move to pop up and work in your favor. And yes, Lee, so most of my indicators are free indicators like the moving averages and the awesome oscillator. And at least from my experience, a lot of those are common across like the Bollinger Bands, for example. You can more than likely find those on trading views across multiple trading platforms. But if you're talking about my indicator specifically, like the divergent bar indicator is one that I had Eric create for me here based off data I use. Same with the compound breakout tool. All of that should be available for TradingView as well, is my understanding. Certainly feel free to contact customer support though to confirm that. But I believe Eric has coded my indicators to work on TradingView as well as Thinkorswim. And I know they're on Tasty. So if you have a Tasty Works or Tasty Trade, I should say now, if you have Tasty Trade and you have my indicators already, feel free to let support know so that they can make sure they're added to the Tasty Trade charts for your account. Or if you just have Tasty Trade and you want the indicators, they are on there as well. And then Bear, I know it's you. If you saw my charts before, I had Eric create some of these indicators, you wouldn't be able to read anything at all. Mind you, this is a bit of a messier chart, but there are reasons why I use each of these indicators and why I like them for proper setups when everything's in line. So might be a little hard to see. But let's keep going to cost and I'll try and explain why I use these indicators if we get a better chart setup than Boeing. At least that one's just a choppy mess. Yes, exactly. There's a reason for the madness. So on cost here, it was also kind of in some consolidation, but our moving averages, which are these kind of gold, yellow, orange lines, those have started to stack up. So the 10 period simple, which is the short dashed line, is now above the 30, which is the longer dashed line, and both of those are above the 100. The Bollinger Bands, which are the blue lines, have started to open up. So that gives us some bullish strength. Momentum is crossed above the zero line and is building higher, and it has room until the top of the axis. So that's a bullish signal and tells us that there's still room to go on this trend move if it wants to. The compound breakout tool that gave us a bullish signal back here. So that is also still valid for the trend move as well. So everything right now is in agreement, which is what we like to see. We had a squeeze, which was printing down here. That started to fire. So that is a good clue for the move to the upside as well. A squeeze can give you a better anticipated range move. The true low, which printed back here, gave you a clue that this was a good discount buy to maybe jump in for a move higher. And you can see that certainly worked out. That happened right before the earnings announcement, actually. Had a nice bullish divergent bar too, which followed through with that higher high. I will say though, what I'm not a fan of right now is similar situation. We're right by price resistance. So we had a little bit of a dip higher here up into 530. But otherwise, you can see this 520 level is kind of held in the past, and that's currently where these bars are stalling. So it could just be a case of it's stalling. It's allowing the other technicals like the moving averages to catch up with the price. And if the price can maintain holding the 10 period simple as support, then it bounces up and continues with the move higher, especially because there's room on momentum. But if it stalls, if it starts to break back below the 10, it could be that we're still just kind of stuck in chop, unfortunately. Let's pull up the weekly chart here real quick. Yes, I don't have a maid. No. Eric was my maid for my charts, and he definitely helped clean them up a bit more. Like I said, if you saw what my charts looked like before he created like the compound breakout tool and combined those indicators to create that signal that I typically look for, oh, you would be like, Allison, I'm never using your charts. And I wouldn't blame you because it was very messy. But he has helped me clean this up quite a bit by making some of these indicators really nice. So Costco on the weekly chart here all of our moving averages are consolidated. It's doing a good job of maintaining the price above those levels. So that helps add to the bullish side rather than the bearish. But you can see that even for the year, similar situation to what we just saw in Boeing, it's having a very hard time kind of breaking above this price level, right? So we have price support down here around 470-ish, 475, and we have a price resistance arguably anywhere between 520 to 530 that we've just struggled to break above. And as you guys know from what I just said, it's very hard for me to buy at price resistance to try for a bullish move. Other things to point out for consolidation is the choppy back-to-back signal on the compound breakout tool. So when it starts to look like a string of Christmas lights, that's a sign of consolidation. Momentum is technically above the zero line, but when we zoom out here, you can't really see the bars very well, right? And so when that happens, kind of like what it did back here, that's another clue that you're in consolidation. We're building into a beautiful squeeze, which happens when you consolidate. And Iyako, great to see you. Welcome. So overall, everything about this chart is pointing more towards chop. Now, if we can actually start to break this range here, then my next target would be up into the ATR trailing stop, which is 544.90. But if we can't break this range, anticipate for that consolidation to continue, which once again leads back to trade ideas like unbalanced butterflies, credit spreads, iron flies, things that can benefit from the consolidation and from the chop, as well as potentially a directional move if you do something like the unbalanced butterfly. But I'm not really seeing anything I'd want to do a trade idea on that either. I'm much more a trending trader. So if I see something that looks good for a trend, I'm all for it, but I'm not really wanting anything for that. Yeah, the dude, it does look like it's stalling at that price resistance. So if you have profits, no harm in locking in the win. Like I said, you can always look to jump back in and try and play it higher. That's actually what I did with KB Homes, and I'll pull that up here in a second after we talk about Plug. So Plug, great example of what we talked about earlier, where if something's been trending below the 100 period simple and it goes back up to test it, be very mindful that it could be a trap, right? Like Admiral Akbar, it's a trap. That's what it is for the bulls, because if it can't get going in a stronger bullish run, this is not uncommon to see, where basically it either stalls and chops, or you actually get a proper clue to take a reversal back down. And so that's what happened here. We got the reversal lower, right? Had the trend move to the downside, and now we're going back into consolidation and trying to get a bit of a reversal here back up. We had a bullish divergent bar yesterday that followed through with a higher high. We're starting to break the ATR trailing stop. Bit of room up into the 100 period simple to take the trade at there. But you can see this is still a consolidating signal. Momentum starting to cross above the zero line, which helps the bulls, but it's very flat, right? Even zoomed in, we can barely see the bars. So that's still more a sign of consolidation than anything else. Do have a squeeze starting to set up. So if we can close today above the ATR trailing stop, could be a counter trend squeeze where it takes us closer into the 100 period simple for a retest, kind of like what we saw back here. But certainly if it does go up into the 100 period simple and it stalls, if it can't break above it like it did here and it struggles, usually a good place to consider getting back to the short side. So keep that in mind. But as of right now, I would say the thing to watch for today is whether or not this can close above the ATR trailing stop. If it can, then that's a better clue for a reversal move. If it drops back down into the close and holds, one, it will likely make a bearish divergent bar. So that gives you the probability of a lower low compared to today's low within the next few trading days. And two, it means that it's holding resistance, right? So I'd be playing it down into the moving averages, or certainly if it breaks that, playing it back down into the lows here around 750. So one to watch into the close, but not really one I see for a trade idea. Let's pull up KB Homes really quickly. So KB Homes was a trade that we did in the Profit Recycling Mastery, and we actually reloaded back into it the other day. Took it off for a nice 200% return yesterday, but everything about the chart looked great. So one way, right, this is exactly what I mean by there's no harm in protecting profits and then jumping back into a trade idea. So KB Homes had a very nice squeeze, bullish signal in the compound breakout tool. Momentum had a beautiful reset and has started to pick back up. So all of these are bullish clues to the upside. Our bullish signal actually started back here on KB Homes. We can see that we bounced up in price, went right up into price resistance, and then we started to break it, right? Yesterday, we had a beautiful run on this. We broke the ATR trailing stop, turned it into support. The 10 period simple started to roll off the 30 into a bullish trend, and we had a nice move higher. So when we had this great bounce up, I didn't want to see it the next day drop back down and turn against us and have those profits disappeared. So we went ahead and we locked in our winner. But because there's still so much room on momentum, because the squeeze was just starting to fire, we still knew that there was a good chance that this move could continue to stair step up between the room on momentum and the strength of the squeeze firing. So, what we did is we jumped back into a new strike where the cost basis had a smaller risk on it, right? So, we basically just went with a strike once again out of the money to play for the possibility of this continuation. If we didn't get the bounce up today and it reversed, then our profits from yesterday still covered the risk and would keep us net ahead on the trade idea. But if it did bounce up, like it is currently doing, then it allows us to keep playing the move, but on a much smaller capital risk amount. So we're not giving up any of our win. And more importantly, we're not giving up our original capital that we put into the trade idea. And so these are the kind of moves that I like to look for, right? Something where it looks like it's going to be breaking out of consolidation, or at the very least, playing from support into resistance, if not a break of the resistance, and then playing for the trend to move higher. And I will say KB Homes is not the only home builder that has seen a nice move. DHR. I wish I saw this one because this one's also been a really good move to the upside, or not DHR. What is it? DHI. DR Horton is what I was thinking. Um, DHI is another home builder. It had a true low not too long ago, which made for a really great entry for anyone who has that indicator and took it. But yeah, had a recent true low, bullish divergent bar, excellent follow through just for the overnight move. But we had a squeeze. We had the bullish signal start to set up on the compound breakout tool. Momentum crossed above the zero line. So you could have at the very least started to play back into price resistance. And then yesterday as well, along with KB Homes, great follow through higher. It's still stepping up some today. Bollinger Bands are flaring open. The 10 in this case is crossing back above the 30, so it's starting to get into a bullish trend. And so very nice move to where if you either jumped in off the true low or maybe you waited a day for that confirmation, would have allowed for some very nice profits to be taken. So these are the types of moves I usually lean towards trading. And so that's what I'm searching for right now. I'm doing some scans later today, hopefully to find some more of these setups to jump into if they're possible. But there are quite a few things that are hitting exhaustion, which makes sense because the market has had a great run up into 4,300. And now this is also kind of stalling here into the end of our session. And before I go, I am a little over time, so I apologize. I don't think anyone's on after me. But I did want to let you guys know that Trendy John, for those of you who don't know him, he's one of the traders here at Simpler Trading. And he has done a really great job recently with his trades. And what he likes to do in particular is trade off of supply and demand levels. So that's one of his indicators, one of the things that he likes to use to trade off of. And so if you're curious about that and want to learn a little bit more about how he does that, he does have a free webinar that is tonight at let me copy the link here and I'll post it to you guys. But he does have a free webinar that's later tonight at 7 p.m. Central. Once again, it's free. Don't have to pay anything for it. And you can certainly feel free to sign up and see how he likes to trade the market using those supply and demand levels. There's a link for both of you guys to let y'all know where it's at. Oh, and is he up next too? Great. Well, then I will jump off in case I'm stepping on his time because I'm sure he can explain it a lot better than I can on the supply and demand levels that he uses. But thank you guys so much for joining me. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to y'all next week. Bye.